Good morning, everybody. It is Tuesday morning at 10 o'clock Eastern Time, April 13th. I just want to cover what I'm thinking and for today and show you kind of how I'm looking at the charts right now. So let's just jump into it here. This is a daily chart of the S&P Mini, the S&P 500. Now, of course, it's extremely overbought. It's had a 2-month rally, and so we're getting a little hesitant. We don't want to add any positions here for the long side. I don't feel as though the risk reward is worth it, because after a steady climb like this, any pullback, once the selling starts, it is going to trigger most likely a very sharp waterfall sell-off, and we could lose 3-5% very quickly. It could be more, but of course we'll just take it one bar at a time. So I'm just going to cover here my thoughts. As you can see, the market has trended up very strongly. We've got this bottom cycle, an 80-day cycle. It is topped out yesterday and it's starting to head down now. So this downward cycle will add some pressure and more or less help pull the markets down. And on top of that, we've got this red intermediate cycle. It is actually topping and starting to head down now as well. So that's two cycles that are going to be moving down, and that is going to put some pressure on the markets. And with any luck, we should get a nice short setup and be able to play a downdraft. If not, then of course we should have a very nice opportunity to buy on a dip, where we can add on different sectors and of course on the indexes and most likely metals. So let's just zoom in to the 60-minute chart of the S&P 500. This is the past couple weeks here. If let me just draw on the chart here. More or less, we've got this support level across here, and it broke through the other day on Friday, and yesterday we saw a nice pullback to this level. This morning it tested that support level, and what we're seeing now is the market is overbought, so we don't want to right now I'm not looking to buy anything, although it has come down to support right here. The daily chart is indicating that we're going to have a very strong sell-off unfolding any day now, so I'm not looking to buy long right now. But I'm also not looking to short, because we're sitting at support, and not only are we sitting at support, which is right across here, but this cycle down here is also bottoming, so it's going to provide about 6 hours, 7 hours from now of positive price action. So I don't think buying right now is a good opportunity. What I would be more interested in is to see the price drift up, not rally up sharply, but drift on a nice sideways, and probably somewhere into this level, possibly make a double top, and the cycle should be topping out, and depending what the volume and the charts are saying at that time, then we might find a good shorting opportunity, as this could actually create a mini head and shoulders, which would be a neckline. Oops, sorry about that. Be a neckline something like this, and of course this would more or less be a shoulder, this would be a head, and over here would be a shoulder. And if we can short it somewhere right up in this level, then our stop and our risk will be very minimal, because we'll have a stop set just above the previous high. And if things pan out, then we'll have a beautiful short setup, and not only will we catch a nice downdraft to the neckline, and we'll probably take some profits if that happens, but if it does break the neckline, we're going to have a very sharp sell-off, and we'll definitely have some good reward there. So that's what I'm looking for on the indexes. We're probably 1 or 2 days away from that. Earnings season has just started, so it could take a day or two for all that good news to kick in, and for the big money to start selling into this expected news. Okay, now let me just pull a chart of gold here. I've focused on the cycles a little bit the last week, because they are important, and a lot of people don't use them, but they do definitely help time pivot points. Now, gold is in a very strong bull market here, and the recent trend over the last 2 months is actually up, so it's it's always risky picking a top. Topping is a process. It usually takes several days. Depending on the chart you're on, it could take weeks and months to top. But as you can see, bottoms seem to happen very quickly. When you get these capitulation bottoms, it's usually an event. It's a 1 or 2 day thing, and then it reverses. But topping is a process. It kind of grinds out, shakes people out who keep trying to short, and it ends up taking several days of this choppy action, and that's why picking tops are extremely tough. So this chart here, we can see the longer term cycle here is up, and it actually hooked down yesterday. And we also have this shorter term cycle which has hooked down now. So having two cycles pulling down on gold, I'm definitely expecting more of a pullback. I'd like to see prices of gold kind of drift up a little bit, similar to what the indexes are going to do, almost create a shoulder, which I'll zoom in on the 60-minute chart and show you in just a second, and we could hopefully short somewhere up here and catch a downdraft, but we'll have to play that by ear. But as you can see, when two cycles top out together, which you can see back here, we had the intermediate and the long-term cycles both top, and of course it created a large wave of selling. And the previous wave here, we actually saw the top cycle, the larger cycle top out, but the shorter term cycle was actually bottoming. So it actually, when the cycles are not in sync, you don't get an actual top. So what we're actually looking at is something very similar to this previous top back in January. I'm not saying it's going to sell down that far. I'm thinking it's probably going to drop to the 1120 mark, maybe 1125. We'll have to play it by ear, but somewhere right across in this right through this middle of the noise, more or less, somewhere in this range will be an excellent opportunity to pick up, because that is a lot of support in here. So that's my thoughts for this morning. And let me just show you the 60-minute chart of gold here. Okay, so here's the 60-minute chart of gold. Yeah, okay, so here's the more or less support level that it's dropped down to. It's had a nice kind of slow, steady drop, which is actually relatively bullish. We did have some selling spikes yesterday, which I mentioned in the chat room. These selling spikes up here, they're called tweezers. The price goes up, gets slammed by sellers, goes back up, gets slammed by more sellers, and they're called tweezers, and they're reversal candles. And so those are very bearish. And then of course we saw prices go sideways and then finally slide, and we saw a couple big sharp drops yesterday, indicating that sellers were starting to take control. And the rest of the price action, more or less, has been a nice steady decline. So we do know sellers are picking up, but the price hasn't just dropped right off. It's had a nice drift, so it's a slow, steady selling of gold. It's not panic selling. So that is bullish action, and of course it is trading right in the middle of a support range here. So I don't want to, as much as I'm bearish on gold for the short term, for the next 6 to 9 days, I'm expecting to see it drift higher right into a resistance level here. We'll hopefully be able to short it and have a stop set above the previous day's high, and we should have a nice downdraft. And with any luck, this is a very similar pattern to the indexes. It's almost like a head and shoulders pattern. So we've got a shoulder, a head, and we're hoping for a shoulder over here. And because if we can short it up here at the top of the shoulder, we'll not only make money on the sell down to the neckline, where we'll take some money off the table for sure, but of course if it breaks that neckline, we're going to get probably about another $15 or $20 drop from there. So that'll be definitely a profitable play. So those are my thoughts for this morning, and I'll talk to you guys in the chat room. Talk to you later. Bye.